Adidas has been left with all of this inventory of Yeezys and all of these Kanye West products that they're now trying to figure out if they should dispose of, try to sell off, or I guess dispose of, write off. So that's why I wanted to talk about Adidas, because I thought it would be good to kind of see what's going on with their numbers.
Well, this one will be interesting. First thing that jumped out to me was this cash and cash equivalents. I mean,
yes,
and these numbers are in these are in what, million euros is what this is?
This is in, yes, €1 million. So okay. It's actually 800. That's 806 million.
Yes.
Okay. Yeah. So they are in euros. They're in millions. And there was one more comment I was going to make. These are just third quarter results because they have not yet released their 2022 financials as of yet.
Okay. Mm-hmm. So, I mean, this is just telling us at the end of third quarter, here's what their position looked like. I mean, because that's an important thing to know about the balance sheet. The balance sheet is telling you what their financial position looked like at that point in time. So in this case, at the end of September of 2022, and you compare that to the same time the year before, Adidas had $3.6 billion in cash and cash equivalents. Fast forward a year later, September 30th, 2022, they had $806 million. So I'm like, that's what, 2.8? Is that 2.8. Roughly what, 2.8 billion? So immediately I'm asking myself, like, that's a, what is that, a 77% change?
Yep.
Yeah, a 77% of your money has gone out the door. I mean, because even if you think about it in smaller terms, is, you know, let's say, you know, if you had $1 today, and let's say, you know, a year later, I took away 77 cents out of your dollar, like, you were literally left with 33% of what you had before. So the very first question that I am wondering is, what is going on? Like, what did you spend all that money on? Or like, where did that money go?
Right.
Now, it's important what you just brought up about the inventory and, you know, their dilemma that they're trying to think through, because a lot of that money, when it looks like inventory had the biggest jump. Like the inventory went up by almost $3 billion.
Yep.
And so it's like their inventory went from 3.6 to 6.3. Now, the question I'm asking is, if they write off all of the Yeezys or Kanye West related inventory or whatever, like, how much money are they going to lose from that if they write that off? Because, I mean, most of their money, like their biggest change, happened there. So that was why when you pulled it up, I was like, oh, wow. Okay, this is going to be interesting.
And actually, I just looked it up real quick on the internet. So allegedly, according to this hyper beast, I don't even know if that's like a legitimate site, but they're saying that Yeezy inventory is valued at around $1.3 billion US.
Oh, wow. That's tough.
As of euros, I think euros right now is about equivalent to dollars. I don't know what it was, what rate it was at as of Q3. But I mean, that's like half of their increase, basically, right?
Yeah.
So because they went up like 2.8 billion euros quarter over quarter, 2021 versus 2022. So yeah, that's $1.3 billion US worth of inventory. They have to decide if they want to sell or write off. Who would want to be an investor and not having that conversation in that room?
I mean, I will say, from being in some of those rooms with, you know, some of the largest investment firms, and sitting down with CFOs, having to prepare CFOs for those meetings, like those conversations can get very, very tense. And I think that's where, like I said, if you're looking at the numbers, you can start to see the signs of things changing. You can kind of get a feel for what's going on. And I always tell people, is before you invest in a company, or before you even go all in on an industry, look at how some of the major players in that industry are navigating it. Now, I will say something else that jumps out to me is the accounts receivable. Now, because when most people think about Adidas, they think like, hey, if you go to, let's say, Foot Locker or Dick's Sporting Goods and you buy a pair of Adidas, that Adidas corporate makes money. And I'm not necessarily sure how their contracts are set up with these stores, whether they just sell product to Dick's Sporting Goods and then that's their, and then anything that happens after that all belongs to Dick's Sporting Goods. Like, I'm not sure how their sales arrangements work, but the fact that their accounts receivable went up, what that means to me is it looks like either they sold a lot more shoes or people are taking longer to pay them.
Yeah.
And I think for any business that becomes important is like, if your accounts receivable balance is going up, but your sales are pretty flat, what that means is your customers are struggling to pay you, which means you're probably going to feel the pinch when it's time for you to pay your vendors or for you to make payroll or even for you to pay yourself as the owner.
Yeah, and I'm looking at the numbers. Adidas only grew 11% on their revenue. So it's definitely a delay. So they only grew 11% Q3 2022 versus Q3 2021.
So yeah, and I will say as well, their AR only went up by 11%.
Yeah, you're right. I'm looking at that
So
now. So it makes sense.
but one of the things that I would say is like, if I was Adidas and I was in that situation and I see that my cash went down from 3.6 billion to 800 million euros, I'm like, okay, all right, what kind of changes can we make on our accounts receivable terms?
Right.
Because we need to get more cash in the door. Like, hey, can we do something to make sure that we have enough cash to run the business? Because if we run out of cash, especially if they're debating about whether they're going to write off the the entire Yeezy inventory line, like that could be pretty interesting for them.
Yep.
So the other areas, I mean, if you can keep scrolling down,
All right.
it doesn't look like much really jumps out to me on the other categories.
What would
There
other
was
intangible assets be? I guess like the branding or the would it be like no, trademarks would be like the branding, like the Yeezy brand and stuff like that, right?
well, I guess this is like kind of like a technical accounting. Like, so whenever I see goodwill, trademarks, other intangibles, to be
Mhm.
honest with you, you really got to look at their 10K, and in the 10K they explain like what falls into those categories,
Got
because
it.
it isn't like there's a set rule of only this can go in other intangibles. So you would have to look at their actual 10K or 10Q, because in that they're gonna, like, every company that produces one of these financial statements have to put notes explaining like, hey, what goes into this category versus that category.
Yeah. So that looks I mean, I think all in all, just based on what we're seeing with Adidas numbers, I feel bad for them. I mean, it is a company after all, but I think for me, this is one of those situations where I think they really betted heavily on the Yeezy products, and they were doing really well and it was working really well for them. And I think if I think about a company that sells shoes or apparel, it's fast turning inventory. And so it makes sense to me that they have a larger inventory balance. But I think one of the things that you have to work through, especially as a small business, is how much inventory is enough. Because when situations happen where you're not expecting it or you didn't plan for it, can you still move that inventory relatively quickly? And so that for me is like one of the takeaways as I'm reading this is like, I get that their inventory balance is as large as it is. I think for a company that turns over relatively quickly on the products that they sell, it makes sense. But now, really, half of that increase I wouldn't say necessarily tied to the Yeezy products, but it's like, hey, half of that, because what was their number again? The inventory number is 6.3. So of the
Mhm.
6.3, they had, and I don't know what the updated numbers are, but they had about 1.2 billion of inventory tied to Yeezy. So, I mean, that's a loss. If they decide not to sell any more of those products, that is now a loss that they're going to have to take. All
Yeah,
right.
I mean, it is very interesting. I mean, because I think when you start to look at it in this way, you start to really get back to what are some of those strategic business decisions that you have to make.
Mhm.
Like I said, when we started off looking at the cash, like you have to make sure you have enough cash coming in your business to continue operating and doing, the different things that you're doing. Because you could look at this and say, well, we have 6.3 billion in inventory, we got 3.2 billion in AR. When you look at property, plant and equipment, we got 2.3 billion there. Like, yes, those things may have value attached to them. But if you can have all of that, but if you run out of cash, you're still going to be hurting. So
Right.
I do think that part of running a successful business is making sure you have enough cash to fund what you're doing. Now, I'm curious to look at their liabilities. So can you scroll down a little bit more? All right. And
Absolutely.
let's see what's going on in the liability section. All right. So
Is that
first thing
good?
that jump.
Can you read that okay?
Can you zoom in a little bit more?
Yep.
Right there's fine. All right. So first thing I'm seeing is their total current liabilities went up by almost 2 billion euro. And most of that is in accounts payable. So what that means is they're taking a little longer to pay other people. Now, I don't know if that is because like, hey, they're buying more, and it's probably because they bought more stuff, because if their inventory went up, they probably bought more materials from their vendors, and they're kind of trying to match the timing. Like, we don't want to pay our vendors before we get paid from our customers.
Yeah, that
So,
explains the increase in accounts payable. What about the short-term borrowings? That's a pretty
so
big
the
increase.
short-term borrowing. So some of that with short-term borrowings is some of that short-term borrowings could have been stuff that was long-term in the prior year. It's just now that stuff is becoming due within the next 12 months. So it just moved from long-term into short-term, because what we're seeing is the short-term numbers went down some, and I mean, the long-term borrowings went down, the short-term borrowings went up. So it may just be that, hey, some of that was a shift. Like some of that growth is just related to, you know, long term that now became short term, but they did borrow some extra money. So part of the question I think you got to ask yourself is, if you are borrowing money to run your, to fund your business, like, are you putting that money in a place that is going to be profitable?
Yeah,
And it
I
looks like they invested heavily in inventory. And the question is that going to pan out?
Yeah, that's a good question. I think one thing I will applaud them for here is the increase in accounts payable. Because what this number tells me is that they are doing a good job of managing their cash, or trying to manage their cash more so, because it's like, I guess you already have your cash burn relatively quickly. Like, you're losing a lot of money based on what we saw. There's a pretty big gap versus where they were last year. But this at least gives me a signal that, you know what, they are controlling how quickly they're paying back the money that they owe. And I think as a business owner, is as you're taking more funding, or I guess loans, or maybe capital into your business, you need to be mindful of how quickly that money is going outside the door, or out the door, or as you're investing. So I think there's really that balance between your accounts payable and accounts receivables. And large companies have entire departments that are dedicated to collecting on money that's owed. And so I would have just liked to see them kind of be a little bit more aggressive on the accounts receivable side, because that number going up didn't really help their cash position. But I think the AP, at least accounts payable here, from what I can see, it looks like they're doing a good job of at least trying to manage how quickly the cash comes out the door.
Absolutely. So if you scroll down a little bit more and see if
Yep.
there's anything else in like the equity section.
So
Um,
if I look here,
okay, so nothing here really jumps out in a major way to me, kind of in the equity section, except for, like I said, retained earnings went down, which is likely a factor. My guess is that they probably lost money in 2022. Yeah, that would be my guess. Now, this is something that you don't see this in every set of financial statements, but sometimes you see it. Like what they have is their additional balance sheet information. So when they're looking at like operating working capital, like the big one is the finance leverage. Um, if you look at the finance leverage, there, last year they were like 42.3%. This year they're up to like 104%, which to me tells me like that is pretty leveraged, meaning like they are relying on, on debt a lot more this year than they were in the past. Like
And
in
this
the
is before the
past,
Yeezy scandal, so I don't know. I'm concerned.
yeah. So I think this one is, and again, if you're a business and you're trying to go get a loan, like if you're trying to get a substantial loan, they're looking at stuff like this, like how leveraged are you? Like how dependent are you on the debt to run your business versus you being able to generate enough cash flow from your operations to run your business? And for if you're a small business, that's looking at things like, your credit card debt, your line of credit, your business debt. And they're looking at that saying like, if you were not able to get any more debt, could you still finance your business? And for a lot of businesses that, like say, if you're over 100%, what that tells me is if you lost the ability to take out new debt, you might really struggle. And that's not to say that, hey, your business is dead. That just means like, hey, you probably got to tighten up some things around cash, and you're going to have to make some smart decisions about how do we either reduce our expenses, how do we reduce some of the risk to get more cash flowing or positive cash flow flowing in the business.
Yeah, and it tells me that you're very dependent on other people to help fund your business, which can be dangerous as a small to medium business, because if something happens today, you're not in a position where you can bounce back quickly. So something to be mindful of.
So thanks for tuning in, and until next time.